Sure. So, Maham, first of all, congratulations. I think your presentation was beautifully covered. A lot of the points which I wanted to talk about are have already been spoken about. So to answer this question, I'll break it down into pieces. I'll talk about COVID impact on India in trade, and then how the economy has revived, and what is now going forward. So I step back to 2020, March to May 2020, India witnessed the largest lockdown in the world. Factories, businesses, offices, everything was shut down. Now, the export and the import took a massive hit during that period. Our exports declined to almost about 35%, and imports declined to 28%, which means there's a huge amount of trade finance gap and the general working capital finance which had emerged in that period of time. Now, having said that, when the lockdown opened, what is it that we were witnessing? We witnessed that the labor population had majorly migrated to their villages, their hometowns, so obviously there was a lack of manpower. We witnessed that the factories which were wanting to come into operational capacities perhaps did not have the raw materials or did not have the working capital to procure raw materials, because for a longer period of time they were shut down and they had to actually put the bills, but there was nothing which was coming in as cash flows. We witnessed that even if they were wanting to take financing from the local banks, while the local banks had liquidity, they were surplus with liquidity, but they were really shying away to lend at that point in time. So these were the impacts which were happening. We also saw a lot of delinquencies coming up. We saw a lot of NPAs rising up during that time. Hardest hit have been MSMEs, because on one side they have to pay to their suppliers to procure the material, on the other side they have to receive from their debtors, right? And they were the ones who actually got badly hit because of the lockdown and because of the COVID situation. Now, moving from the operational aspect of COVID, now let's move to the financial aspect. What is happening in the banking world or the financial world in post-COVID or current COVID situation? Now, force majeure is one clause which we have always talked about, but this is one situation when force majeure was actually activated. In terms of our export contracts or any domestic contract also, we saw a lot of buyers actually using this, or even a lot of suppliers using this as a caveat to get out of a contractual obligation. So I'm sure even TradeWind as an organization, since you support a lot of export receivable, you might have also faced this, that this was one of we saw a lot of rampant increase in contractual obligation not being followed, be it the payment obligation from the buyer side or be it the performance obligation from the supplier side. And both of them probably might have their genuine reasons to back off. We saw insurance market getting very, very squeezed. We saw that the capacities which were there earlier, pre-COVID world, had drastically come down in terms of capabilities for underwriters to underwrite that insurance cover. That insurance cover can be for a sovereign or even for a corporate. And we also saw the cost of insurance drastically rising up to cover or mitigate that risk. In terms of banks, the trend for India right now is that a lot of the MNC banks they have stopped onboarding any fresh client. They are very happy to do lending to their existing portfolio, but they are completely mandated not to onboard any fresh clients. Having said that, now this is a grim side of financial industry and market. What is the silver lining to the dark cloud is that the emergence of these alternate financing providers. Like Maham, you also mentioned in your presentation, the rise of the fintechs. We saw the rise of factoring companies. We saw the rise of alternate financing funds, trade funds, hedge funds, who actually took this as an opportunity to provide solutions which are around trade finance, supply chain finance, and a new thing which is structured trade finance. So from a traditional trade financing, which has historically been receivable financing or payable financing, we saw a new emergence of asset class, which is structured trade financing. Because the risks that we used to see pre-COVID were very, very lopsided towards probably a liquidity risk of a counterparty or a commodity risk of an underlying trade. But now we are not even dealing with those, we're dealing step ahead of that. We're actually dealing with the sovereign risk. In past 1 year, we have seen many countries which have defaulted. We have seen countries in Africa like Zambia, there have been a Eurobond default. So it's also about the sovereign risk. How is a sovereign going to perform? We're talking about the performance risk. Earlier, we never doubted the suppliers, even if they had a good credit standing or a relationship between supplier and buyer. But now we are actually doubting the capability of a factory or a supplier to actually have that wherewithal to manufacture and supply on time. We are seeing systematic risk. We have never had the question of a going concern ever in the history. This is the time when we are actually asking whether this organization will exist for coming months or coming years, because in the past 1 year we have actually seen a lot of companies have declared bankruptcy voluntarily, or they have been taken to NCLT through their creditors, right? So the very existence of the companies are currently under question. So this brings a lot of systematic risk in the trade finance market. There's a high risk of liquidity. Obviously, there's a high risk of default, which is their performance. So everything in terms of risk assessment, when a lender is sitting on a particular case, they have to actually see everything, which was probably earlier was not a perspective. Now, coming with that, obviously there have been operational challenges, because even the bankers are not going to offices. They are sitting in their homes. Working staff is not going to office. Everybody's sitting in their homes. So there's a lot of operational challenges, which has made the process of lending a little bit slower as compared to when pre-COVID world. Now, this is all the reality that we have faced in 2020. Now, what has happened, the brighter side of this is complete digitalization. Not even the banking sector, the non-banking sector, the industries, the corporate, even the MSMEs, everybody has realized they want to move from a paper-based economy to completely a no-paper economy, right in terms from signing an e-contract to having an e-invoice to having bills of lading which are electronically signed. So all of that, I think, it's a very big bane, which I will say, which COVID has probably caused, that the mindset of every individual is right now supporting digitalization, something which there was a change management issue. People used to resist this change, but now they understand the importance of sitting on their laptop and managing everything which is digital, right? So that has been a very big bane, I think, because of whatever happened last year. Also in terms of alternative asset class, when I say even banks are being little bit risk, they are being very conservative to risk, but then there are these hedge funds, there are these trade funds who are very actively now looking at trade finance asset as an asset class. They might not be doing a primary lending, which means they might not be lending to a counterparty directly, but they might be acting as a funds of funds. They may probably try to fund existing factoring company or existing fund which is already having a portfolio of trade finance. So that is again an asset class which is emerging, which is completely a transformation which was not there earlier. And in the end, what I'd like to probably say is summarize is that every crisis comes with it bringing a lot of opportunity. So while we are battling a gloomy environment, we are facing job losses, there are loss of our loved ones. At the same time, I think it's a time to pivot, it's a time to be agile, it's a time to think about different business models, and there are things which you could do in a different way to come up and brave out this situation. So a long answer for your short question, Maham.